Okay. Hello, members of the board and audit committee. As a partner of this audit project, my primary responsibility is to ensure that SMB's financial statements are in line with the true and fair reflection of MFRS and maintain a high degree of professional skepticism, and ensure that our audits strictly comply with international auditing standards. While we note the strong revenue growth reported by the company, I remain concerned due to several significant outstanding issues. In my opinion, Zulkifli and partners cannot and will not sign an unqualified opinion based on the current draft financial statement. We recommend that management immediately provide specific documentary evidence and make full disclosure. Otherwise, we will issue an unqualified opinion or be forced out of business. Okay, thank you.
Yeah, hello everyone. I'm the CEO of the Sabah Maju Bahada. First of all, I would like to state my clear position on all current audit disputes. From the perspective of company operation, market development, and sustainable operation, I believe there are no material misstatements in our 2025 financial statements. The accounting treatments we adopted are in line with actual business conditions and the long-term construction industry norms. Now I will talk about the key risks we are facing right now. First, our debt-to-equity ratio is nearly touching the non-convenient limit. If the audit report is modified, our ongoing refinance negotiations will be completely interrupted, which will directly lead to liquidity risks and even covenant breach. Second, as a Berkshire-listed company, a qualified audit opinion will trigger investor panic, send our share price trembling, and ruin the company's years of accumulated market reputation. Third, an anonymous whistleblower email has no any supporting evidence. Taking unproven allegations as audit basis will only delay the process and bring unnecessary public pressure to the enterprise. For the disputed items one by one, the 35 million barrel order revenue only lacks formal procedure approval, and the customer's final confirmation is certain. The 80 million receivables came from government-linked companies with a long history of full repayment, so impairment provision is not needed. The related part subcontract follows market rules and file transactions. Besides, our company has sufficient project reserves and active financial progress. There is no going concern uncertainty at all. That's all for my opinion.
As the CFO of the company, my responsibility is to ensure that financial statement fairly reflects the company's business performance and financial position. And first, the 35 million ringgit revenue from the variation order should be recognized under the percentage of completion method. We have a long-term relationship with the client, and approval is only a formality. Therefore, the economic benefits are highly likely to be received. And second, the 80 million ringgit receivable overdue from more than 180 days are mainly from government-linked entities. Although payments are slow, the risk of default is very low. Therefore, an impairment provision is not necessary at this stage. In addition, the company is currently negotiating a refinancing arrangement with banks. Significant accounting adjustment or modified audit opinion could negatively affect these negotiations and create unnecessary concerns about the company's financial stability. Finally, the letter is unsupported by evidence and should not influence the financial reporting process. Based on these considerations, management believes that the financial statement fairly presents the company's position and supports the issuance unqualified audit opinion. That's all for my opinion.
As the chair of the audit committee, we are in a very serious situation. Our audit report for the year 2025 is not yet signed. We are facing critical unresolved matters. My ultimate duty is to protect our shareholders, uphold compliance, and maintain true corporate governance. Right now, I see four major governance failures. First, the 35 million ringgit variation order. We recognized that revenue without formal customer approval. The auditors do not have sufficient audit evidence. Second, the 80 ringgit million overdue trade receivable. They have been outstanding for over 180 days with zero impairment. And third, the 120 million ringgit subcontract. This was awarded to a company linked to the CFO's family member. Hiding this related party transaction in our draft accounts is a serious breach of transparency. I know management wants market stability, but looking at these facts, my prelimination stance is clear. We cannot trade governance for market relaxation. We must not ask the auditors to sign the clean opinion unless these numbers are fully justified. That's all for my opinion.
As the minority shareholder representative, my main responsibility is to protect the interest of minority shareholder and ensure transparency, accountability, and good corporate governance. First, I am concerned about the 35 million ringgit revenue recognized without formal customer approval, as this raises questions about the reliability of the company's reported performance. In addition, the company has 80 million ringgit in receivable outstanding for more than 180 days, yet no impairment loss has been recognized. This may overstate the company's financial position. Another concern is the 120 million ringgit subcontract awarded to the company linked to the CEO's family's member. Since it was not disclosed as the related party transaction, it raises concern about transparency and the potential conflict of interest. Furthermore, the company is facing increasing financial pressure due to its debt level and the refinancing uncertainty, but these going concern risks have not been adequately disclosed. At the same time, the whistleblower allegation regarding inflected project progress and the fictitious invoices increase concern about possible fraud and should be properly investigated. Finally, I am also concerned about auditor independence, as non-audit fees amount to 80% of the audit fee, which may affect confidence in the auditor's objectivity. Therefore, I believe the board and the external audit should prioritize transparency, proper disclosure, audit independence, and the shareholder potential before any final audit opinion is issued. Thank you. That's all for my opinion.
So I have a question want to ask CEO. If auditors require adjustment to the 35 million ringgit engineering income and the 80 million ringgit overdue government receivables, how will the company avoid breaking debt, contract limits, and liquid risks?
Yeah, I think that we will hand in all missing official approval documents right after the audit report. Government-linked clients have never defaulted before, so no impairment provision is necessary. We will talk to lenders to explain these are only procedural issues and push forward ongoing financing to fix liquidity pressure. And I also have a question to ask the shareholder representative. Why are you concerned about the 120 million subcontract awarded to a company linked to my family member?
I am concerned because the transaction was not disclosed as a related party transaction. Minority shareholders have the right to know whether the substrate and awarded fairly and at arm's length. Without proper disclosure, investor cannot assess whether management acted in the best interest of the company or whether there was a conflict of the interest.
And Madam's Madam CFO, you defend the 80 million ringgit receivable because they are government linked, but they are 6 months overdue. In auditing, historically, they pay slowly. It's not valid audit evidence. If those clients default tomorrow, who takes the blame? The CFO or the board?
You cannot treat government-linked clients like normal private companies. In Malaysia, government entities always pay. They just have very slow budget cycles. If I record an 80 million ringgit impairment today, our profit drops to zero. That will instantly breach our bank loan covenants. I'm not relying on hope. I'm protecting our credit rating. A massive impairment today will create a fake panic for our lenders.
So I want to ask the CEO, if auditor issue a non-qualified opinion and the trigger stock price drops, what special step will management take to protect shareholders' interest?
In my opinion, the company will publish complete supporting materials for disputed projects and hold investor meetings to clarify all audit disagreements. We can rapidly replace the audit firm and release stable cash flow and project data to clear market worries and restore investors' confidence.
Okay, I want to ask you, CFO. 80 million has been outstanding for more than 180 days. You are the CFO. Under MFRS 9, you must apply the expected credit loss model and record an impairment. I want to ask you, why is there zero provision in the draft statement?
Okay, thanks for asking. And 80 million ringgit overdue receivables was subject to ongoing legal recovery proceedings with formal collateral fully covering the full principal amount as verified by external values. Per MFRS 9 ECL requirements, the collateral's recoverable value is eliminates significant credit loss risks. Hence, no impairment provision is recognized at the reporting date. We will continuously resist collateral realization process for subsequent reporting periods.
Okay, thank you to the members of the board and audit committee. Finally, let's share your respective opinions.
As the minority shareholders' representative, my primary concern is protecting shareholders through transparency, proper disclosure, and good corporate governance, given the unresolved issue relating to revenue recognition, related party transparency, going consent risk, whistleblower allegations, and auditor independence. I do not support a clean audit opinion at this stage. The auditor should obtain sufficient evidence and ensure all material matters are properly disclosed before making a final decision. That's all for me.
Okay, and as CFO, my ultimate position remains firm. Management has exercised a high degree of commercial prudence in making financial decisions and has fully complied complied with accounting standards. There is no blind optimism regarding MFRS 9 and then the 80 million ringgit government receivables. We process formal collateral that have been verified by an external appraisers and fully cover the principal amount under the expected credit loss, which is called ECL framework of MFRS 9. The recoverable value of this collateral effectively eliminates significant credit loss risks. Therefore, it's entirely reasonable not to recognize any impairment loss as of the reporting date. Forcing an 80 million ringgit impairment loss at this point, or reserving 35 million ringgit in this revenue, would instantly wipe out our profits, trigger bank loan default clause, and create an artificial liquidity crisis. This would severely disrupt our ongoing refinancing negotiations and harm shareholders' value. So I strongly argue that the audit partners to examine the concrete evidence of our collateral and actual process of this refinancing. An unqualified clean audit opinions is only decision that reflects our true financial realities and the only way to protect companies from unnecessary market panic. That's for my opinion. Thank you.
As the chair of the audit committee, my main duty is to protect corporate governance. We cannot compromise on transparency. The unresolved issue, especially the related party contract and the overdue receivables, are just too material to ignore. We must build long-term shareholder trust, not just protected short-term stability. That's all for me.
As a CEO, I have to express my strong disagreement with this decision. In our view, all disputed matters are procedural issues rather than material misstatements. A modified audit opinion will bring several liquidity crises, share price decline, and reputational damage to the company, and harm the legitimate interests of all stakeholders. Management will sort out all supporting documents and reserves the right to further communicate with the audit committee and the relevant regulator bodies. Meanwhile, we will try our best to mitigate the negative impact of this result on the company's operation. That's all.
Okay, thank you everyone. As an audit project partner, I consider both SMB and international auditing standards. My final decision must be based on professional objectivity. While I recognize management's financial efforts, these issues are not sufficiently serious to warrant a negative opinion. Based on this, my final professional decision is to issue a qualified audit report on the financial statements of Sabah Maju Berhad for the financial year ended December 31, 2025. In the audit report, we will make it clear the financial statements give a true and fair view in all material respects except on the basis on which the reservation is formed. We will also add a paragraph explaining the significant uncertainty associated with going concern to remind shareholders. This reservation is our final, negotiable audit position. It both delivers transparency to the market and allows companies to move forward with financial reporting. This decision is final. Thank you very much.